Italy's Prime Minister Silvio Berlusconi has attacked ratings agency Standard & Poor's for downgrading Italy's credit rating as contagion fears heighten in the debt-stressed Eurozone. Mr Berlusconi claims the move was politically motivated, but Standard & Poor's says growth prospects for the heavily indebted Italian economy are getting weaker and the planned reforms won't make much difference. The downgrade is expected to have a major economic impact as a lot more countries have Italian debt than have Greek debt. Europe correspondent Philip Williams reports.
So what the Berlusconi is going on? With Europe's second largest debt to GDP ratio and low growth rates, the downgrade is no real surprise. The market had expected as much. Milan-based trader Eduardo Luini says Standard & Poor's action was anticipated and he hopes it will spur the politicians to implement even greater reforms. But it comes as the Prime Minister, Silvio Berlusconi, is preoccupied with a series of court cases. He did reject the downgrade, saying it didn't reflect reality and that the government was already preparing measures to spur growth. The recently passed multi-billion euro austerity measures are already beginning to bite. Higher fuel costs just the beginning and the anger starting to build. These politicians, this joke of Berlusconi, says Rome resident Romana Tinto, we've had enough. Everyone should get sacked. And from Danilo Fasi, in this period, Italy has shown itself to be politically fragile and uncertain with this austerity package. In Europe's eyes, it's been seen not to be decisive. What Italians fear is that they could be plunged into a full-blown Greek-style crisis. They want to avoid the daily demonstrations seen in Athens against the deep cuts to public spending, where even school children are demonstrating against the lack of basics like teachers and textbooks. This pupil says we want to send a message that we want books, teachers and desks now, and that the crisis is paid for by those who have money, not our parents who've paid 2 and 3 times over. But the pressure is on the Greek government to increase, not relieve the squeeze, with the IMF delivering a blunt message: keep cutting or be cut off.
The ball is in the Greek court and implementation is of the essence. Thank you.
And despite market expectations of an eventual Greek default, German Chancellor Angela Merkel is doggedly sticking to a Greek bailout and the defence of the euro.
I stand by my statement that if the euro fails, then Europe fails as well.
Dramatic sentiments, but it was a day of drama too in Britain, where Business Secretary Vince Cable had dire warnings of hard times to come.
We now face a crisis that is the economic equivalent of war.
Not a rosy assessment, but the straight-talking secretary says now is not the time for rose-coloured glasses.
The truth is that there are difficult times ahead, that Britain's post-war pattern of ever-rising living standards has been broken by the financial collapse.
So what's happened to the optimism of just a few weeks ago that the Greek problems had been covered and that Europe gradually would grow its way out of trouble? That, it appears, has gone south and it risks dragging the rest of the world with it. Philip Williams, Lateline.